Hello, hello, everybody. Team permanent, team transitory. Can you hear me? Can you just let me know in the chat if my audio is working? So, can you?
There are things about Joe Rogan that I think are cool, and I sincerely mean.
In 2013, Jeff Bezos introduced the world to a concept that promised to revolutionize.
Yep, I can say lots of things. Hello, everybody. I'm really looking forward to finally discussing inflation. It wouldn't be a stream without some technical difficulties, would it? Now it's ubiquitous.
Oh man, I think we finally figured it out. My headphones were the problem.
Ah, okay. So
Screwing
you're
it
all
up.
right without headphones. There's not going to be any echo on your side or anything.
Yeah, let's ask people if it's now we can hear you. Okay, that's great. Okay, excellent. Phew. Okay, exciting. Hey, Yui, it's been a while since we talked. It was November last year, I think, huh?
Yeah, it was. So obviously, your inflation video came out only a couple of weeks ago or something like that. But we actually had the conversation in November, so a lot has happened since then, right?
Yeah, and I think, I had to defend you in the comment section like once or twice because you said something like, "Oh, inflation seems to be going down," and that was I think it was even the beginning of November, and then that changed. But besides that, I don't think it was too horrible having done it in November. What are your thoughts on it?
Yeah, I completely agree with the critiques. I mean, making predictions is a bit of a fool's game, really, isn't it? But at the time that we recorded it, it looked like inflation had been going down based on the monthly figures in the US. But actually, what happened is, as soon as I said that, of course, it went straight back up. And now the monthly figures, I think the most recent ones are December in the US, and it seems to have gone up to an annualized rate of over 7%.
Yeah, yeah. I mean, that is definitely crazy. I'm just checking if people are saying I'm in an orchestra building. I think that's because I'm in a new house, and the sound is still a bit horrible here without a lot of furniture, which I can't afford anymore due to all of that inflation, of course. But is it doable?
I really, I really think your sound is fine on my end, but I'm not sure. I mean, I can't
Okay.
speak for everybody else.
Okay.
Apparently, the title of my stream is wrong. Yeah, it probably says something about Age of Empires 4, but I honestly, I, I feel like I can't actually figure out how to do it properly. It just seems to say the last title every time I do it. This is supposed to say Inflation Chat with Money and Macro. Um, yeah, there's no Age of Empires 4 here. Sorry to disappoint people.
Oh man, you're gonna lose half of your audience, I think.
Yeah. Oh my God. Right, okay, wait a second. Yeah, I might see if I can edit it. Oh yes, I think I can actually edit it manually. Here we are. Let me just do that quickly, so no more people are misled, and they can go and watch better Age of Empire 4 players anyway. Yeah, I really haven't figured this out yet. I mean, neither of us have by the looks of things, to be honest. Really.
Yeah, I'm also making you a little bit louder. I see some people saying you're too
I'm
quiet.
too quiet.
Yeah, but that's
Okay.
that's my fault. Now people are complaining on my side as well. We don't play Age of Empires. I think we should. Can you do like the Dutch versus the English?
The Dutch versus the
affection?
English. Yeah, absolutely. We can. Have you played it, Age of Empires 4?
No, but I used to play Age of Empires 2 back in the days, and I've also played like Age of Mythology, Age of Empires 3 at some point.
Oh wow! Oh god! It sounds like you might you might beat me. But I used to play AOE too, but I just started streaming 4, and it's got all the good elements of 2, but it's also improved. I think it's actually a really good game.
I did see some good reviews. Yeah, but I haven't been able to game at all since I was busy moving. But let's talk inflation, UE. Like if you look back, you obviously watched the video. So I'm thinking we didn't mess up too badly, even though inflation persisted. But the thing is, and I think we mentioned that when we spoke, is that we defined transitory very importantly as having to do with the pandemic. And at the start of November, we didn't know about Omicron yet, and the Netherlands even went into a full lockdown again for 2 months.
Yeah, I think the question of what transitory means is really important, right? And I guess I did say that, like we said earlier, I did say that inflation might go back down soon, but then we had Omicron and it didn't. And, a lot of the things that have been driving inflation, the bottlenecks in supply chains, for example, were, exacerbated and inflamed once again. So I think, it's our kind of framework was definitely defensible, and I think basically correct, even if some of the specifics of the predictions maybe were a little bit premature.
Yeah, yeah, and when you think about the position that we had then, has it changed for you? Like team transitory? Have you moved at all?
I've moved in thinking, in the length of time that I think this will go on for. I do reckon we'll have kind of high-ish inflation for maybe a total of a year or more. I think I thought it was just kind of a one-time bump because there were these issues of the kind of one-time jumps in inflation after lockdown ended, right? And perhaps I kind of overestimated that um, overestimated that side of things, and then I kind of underestimated probably issues like supply chain bottlenecks, which I think are actually a little bit more deep rooted than we thought. I don't know what you think of that.
Yeah, so I have actually moved a little bit towards permanent as well, but on other issues more that, when we did the video, we were saying like, expectations, you can't see anything. Now I think in expectations you can see, and that's normal, right? Because it's been going on for longer. So it makes more sense that expectations also move upwards. And I did see some sort of more evidence, especially in the United States, that the labor market was getting tighter. So, and I think it's also very interesting that the discussion moved more towards sort of the wage price spiral. I think that's still a bit premature, but I have moved a little bit towards seeing that that wasn't where it originated, but it is maybe here and there starting to feed into that. What do you think about that?
But do you think that inflation's starting to feed into a wage and price spiral?
Maybe that's a bit strongly put, but I could see that people are now getting more worried about that danger. And I wouldn't say like, for that reason, hike rates insanely and let's shut down the economy. Not like that. But like here in Belgium, especially, I do see like energy prices are big, are especially a big problem here in Belgium. And I do think you can start seeing that now in sort of businesses like bars. I was at a restaurant yesterday, and it does make sense that they will start hiking their prices a little bit as well, if the energy bill goes up by 50%.
Yeah. I think it varies from country to country, right? I think it's worth saying that, so perhaps making these general statements is a bit too difficult, really, and we should stick to country by country. I mean, in the UK, I know that median wages have been rising faster than they were before, but they are still just below inflation. So I think they're like 4% or something. They've risen median wages, whereas inflation's been kind of more about 5% or more, an annualized rate. So I think there's not a sign of a wage price spiral, as I would put it. But I do agree with you that it's definitely something that we need to be concerned about. And it's how, transitory inflation turns into permanent inflation, right?
Yeah, exactly. And I'm just wondering, like, the one problem that I have with it is that we don't have too many historical or easy historical comparisons, I think, to this, where you have such a massive supply chain disruption. Well, perhaps the wars are a historical comparison that then takes so long that it feeds into wages and prices.
Yeah. It is true that there's not really a precedent. I mean, and the concerning thing is, like, while there's not too much of a historical precedent, I do feel that this might be something that we see repeated in the future, right? If we see, perhaps more pandemics, or we see, the effects of climate change, these kinds of supply chain disruptions. So I think we need to figure it out. I mean, the wartime analogy is probably the closest one. I have seen, I mean, there's this whole debate about MMT that's going on at the moment, right? I don't know if we want to get into it or if we want to swerve it.
No, I think it would be good, because I think it would be good to go into a little bit how the debate around this moved forward while we were editing that massive video. And I think there are two, or at least I have seen two important parts of this debate. One is the MMT one that you just mentioned. I think that was going on like last week, so maybe go into that first. And then before that, but perhaps a little bit related, was a massive debate about price controls, right? And now also price controls versus wage controls. But so let's go into MMT first. I think that's a good idea.
Yeah.
Let's get the people
Sorry,
up
I've
to
just
speed.
one issue is apparently I've got a waiting stream in my channel that people are waiting on that isn't this one that's going. Void's Grasp. Void's Grasp, please send me that link so I can just cancel it and tell people to go to the actual stream, because I think I've got my audience split between people who are waiting for one and people who are actually on the one that's happening.
Yeah.
I just still don't understand it, Yuri, honestly. But yeah. Anyway, on the subject of MMT, yeah. So it's been such a massive debate. I mean, there was this whole idea, right, about whether government debt matters, and whether governments can just spend. So modern monetary theorists say, well, governments can spend as long as there's the real resources available, and the only limit is inflation. And I think over the course of 2021, they kind of won that framing. And when governments were spending loads during the pandemic, right, you had not too many people being concerned about government debt in the same way they were, for example, I don't know, after 2008 when Obama was trying to pass stimulus. So they seem to have won that debate and that framing, at least temporarily, during 2021. But now what you have is you actually have inflation, right? So now people are saying, well, okay, you were right that this constraint is inflation, but look at all this inflation. We've reached it, so maybe the expansionary policy wasn't such a great idea, or maybe, you know, it was partially a great idea, but we've gone too far with it. So it's been a really interesting shift of focus. I mean, I don't know what you think of it, and whether you agree with that MMT view.
Yeah, so for me, MMT has always been a bit difficult because I've never taken the time to properly dive into it. I saw some people in the chat like saying, "What's MMT?" MMT is modern monetary theory, and it was really like a reaction to sort of the very simplistic view that the government always needs to tax first, basically, to be able to do some spending, right? And modern monetary theory came in and turned it upside down. And like you said, sort of came very much with this political messaging that you can always spend as a government your own money as long as there isn't inflation. And if you overspend, then you'll see that in inflation, right? But what I thought was interesting is that I also follow some opponents from MMT. So I also follow some Austrian economists on Twitter. And I think I saw someone saying, you know, MMT is like the Austrians on the left, basically, in the sense that they're more sort of about storytelling and less about formal modeling. But this Austrian guy said, like, yeah, MMT was right, but what they're now doing is what I always predicted, is they're not saying now, okay, now we have inflation, now we should stop spending. And I thought that was an interesting critique. What do you think of that?
Yeah, I kind of sympathize with that point of view a little bit, because my interpretation of MMT, and I'm probably a bit like you in the sense that I wouldn't regard myself as an expert on MMT. You know, I engage with MMT quite regularly, but mostly in the form of kind of blog posts, papers. I haven't read, for example, The Deficit Myth. I haven't read, for example, the macroeconomics textbook done by some MMTers. So I haven't delved into it in that much depth, but still probably, you know, enough, I think, that I should have, if they're any good at communicating MMTers, I should probably have a decent idea. And my interpretation was, well, let's spend until we get inflation. And then once we get inflation, we tax, right? Or perhaps some other non-interest rate measures. Some MMTers have talked about, you know, regulation and things like that. But now what we're getting is we've spent until we've got inflation, but nobody's advocating tax. And then I saw, you know, Stephanie Kelton said, oh well, we actually didn't say that we should tax
Yeah,
when inflation is high. And you get,
but
I
that's not true,
actually,
right?
for the record, was that sorry?
That's not true, right? That's very
Yeah.
strange.
No, they definitely said that. Like
Yeah,
that was the whole thing. Inflation, like you control inflation with taxes. And I always thought, by the way, I didn't think that was a very good policy because I don't think taxes are a good tool for controlling inflation. I feel like a lot of taxes would actually tend to increase prices. But anyway, regardless of what you think, that it seems like there's a bit of an inconsistency here, and yeah, it gives me some sympathy with the kind of monetarist or Austrian or Chicago types who kind of said, well, we warned you about inflation and now it's happening and you don't care, you
yeah.
know.
Yeah, yeah, and it reminds me a little bit of sort of the Keynesians in the sense that, and this is because before the stream started, someone was already in the chat and was saying like, hey, you know, if this inflation proves Keynesians were wrong, and I think that's actually the opposite in the sense that the Keynesian theory is like stimulate, or at least a new Keynesian, stimulate through interest rates until you get inflation, and then what happens? Hike interest rates. And I think MMT is very comparable to that, but they just say, no, don't look at interest rates, look at taxes or government spending in general, right? So it's like if there's not enough inflation, MMTers say spend more, and new Keynesians say lower the interest rates or do a lot of quantitative easing. And then if there is inflation, which there is now, Keynesian theory would say, okay, now is the time to hike rates, stop quantitative easing, and MMT would say, I suppose, raise taxes.
Yeah, yeah, exactly. And I guess new Keynesians, that has been the policy, right? To when the economy's running hot, as people say, you just increase interest rates, and then you somehow lower demand, and it seems that MMT it doesn't seem to have a coherent response to inflation. And I think one of the things as well is that even if it does in theory, it's not institutionalized, right? And I think now it's not clear exactly what we want to do. And MMTs are saying don't raise interest rates. Again, a view which I have some sympathy with. I mean, I want to say, I've got sympathy with the view that I don't mind inflation being a bit higher. If that's the price of kind of higher growth and a good recovery, right? I don't mind inflation being a bit higher. And that can be good for debt as well, right? It can erode real debt balances and things.
Yeah. But yeah, I think specifically
yeah.
in the video you said 4%, right? I think you said 4%. And
Yeah,
you got some flack
said
for that
something.
in the comments. People are like, oh, 4%, it's much too high.
That's 4%'s not that high. I don't think people realize how low 2% is, like historically. I don't know what you think of that. I feel like, I mean, it's actually a position I've seen espoused by some monetarist types to say we should have a 4% inflation target because 2% might just be too restrictive and you end up choking off recoveries a little bit too soon. So I don't know. What do you think of a 4% inflation target?
Yeah, so I've had a lot of discussions about this, and I often come across as sort of, being pro sort of loose monetary policy, because I often discuss with, Austrian economists who I disagree with theoretically, and so I end up sort of defending the other side. But personally, I'm really for price stability in the sense that I think it's really good for people from all parts of society that they have a stable unit of account. So I'm not sure if, like, I know the 2% is the target rate, and I think that's better than 4%. But maybe 0, right? If you can ever pull that off, isn't really such a bad thing. Especially since, I know that the argument is like, oh, but inflation helps people who are in debt. But banks adjust their interest rate to inflation, right? So I wonder if that's really the case, if it's sort of already in the expectation of banks. Does that make sense?
Yeah, I suppose it depends on how much of debt is kind of variable rate and how much is fixed rate, right? I mean, I think My understanding, at least again, specific to country in the UK context, a lot of mortgage debt is actually fixed rate. And so, yeah, like, I don't think it adjusts that smoothly, but maybe,
No, no,
I
it
mean,
takes
there's a
time,
difference
right?
between a temporary change and a permanent change, right? If the inflation target was 4%, then it might adjust more readily, or it might be inbuilt into the loan in the first place.
Yeah, yeah. But okay, getting back to the MMT
Yes.
controversy. Um, so I guess the controversy was twofold, right? One was people were saying MMT, haha, MMT was wrong. Other people were saying, no, no, actually MMT was right because this is what they predicted. And then sort of the third argument I discovered was like, oh, but then we told them they wouldn't actually raise taxes. And I think on that last one we agree. And we also, I guess, sort of feel that MMT was correct in the sense that, or at least this inflation is not at odds with what they predicted.
No, I don't. It's not at odds with what they predicted. But I think, being a bit more transparent about, this was going to cause inflation, and we're actually okay with that. And with the caveat that inflation is, I think, still transitory, where we're defining transitory for as long as the pandemic kind of continues, and I guess we can discuss how long that is and whether that's forever. But I feel like it seems like there's been a bit of a shift in rhetoric from the MMT crowd. And I say that, again, as somebody who basically agrees with all of the policies that have been put in place, I just feel that it risks discrediting, active fiscal policy and things like that if you don't acknowledge, some of the issues and like stay consistent on your position.
Yeah, and but I did see just now in my chat, like somebody did say that MMT sort of stresses that inflation comes from the supply side in the sense that it's then not flexible, or that it at least can come from that. And I think that's also the argument that I saw some people like Stephanie Kelton, I think, use, if I interpret it correctly, that no, the reason why we're not advising tax hikes right now is because you have these temporary supply shocks, and they are the main driver of inflation now, which I guess is consistent. What do you think?
Yeah. I mean, it is. I suppose the question for me is, what do we actually do about that, right? Do we kind of ride the inflation out and hope that the supply chains are going to readjust when the pandemic is kind of quote unquote over? Again, maybe there won't be an over. Is that what we do? Or pardon me, sorry, do we do more active kind of something like almost like an industrial policy, right? I mean, I've seen some people from the MMT crowd and the MMT kind of adjacent people talk about some kind of active industrial policy, kind of supply side government spending that aims to expand the capacity of the economy. I mean, I don't know what you think of that.
Yeah, but that will take time, right? Like where are supply bottlenecks, mainly in chips, transistors, and I get the impression a lot of stuff that's coming from Asia. Like, how long will it take to build up supply in that? If you're a government, it will take years, right? So I wonder, if that makes sense. Like
Yeah,
if that will help. No, put it like that.
yeah. Not in the short term. No, I don't think so. I mean, you're not gonna suddenly start producing, microchips in a location where they didn't produce them before, right? Or certain types of cars or anything kind of high tech. You can't do that. I mean, MMT is, and a lot of people, including me, would make the point that the pandemic probably exposed that a lot of our supply chains aren't resilient in the
Yep,
sense that we may be too reliant on like uh,
just in
one
time.
country or a very small number of countries, and that's absolutely true. But you know the question of what to do in the short term, I think has not really been satisfactorily answered by anybody, by the way. So yeah, I mean, supply chains industrial policy is a long-term policy if you can get it right. But
And
yeah, I don't know. I mean, people talk about raising rates in the short term, right? But MMTers aren't too fond of that.
yeah. Hey, I actually think that's a good bridge into the next sort of controversial discussion that we haven't talked about in our inflation video, but has since happened. And that is some supply side policies, or no, maybe supply side policy is the wrong word, but price controls. There was a massive debate around price controls. I think we should maybe talk about that a little bit. But first, maybe we can sort of take some questions from both of our streams and then move on to that discussion. How does that sound?
Yeah, that's a good idea. It's a good opportunity to say to chat, we have two, arguably three chats on the go here. So maybe, sorry that we can't, talk to each other and also constantly have conversations with you. But we're going to stop every so often to answer some of the questions.
Yeah, exactly. So let us know, and then both Yui and myself will have a look and read out loud any questions from the chat. Although in my chat at the moment, I see like a lot of people also just discussing passionately with each other. I'm not sure if they're even listening to us.
Maybe that's best.
Let me see. Planned economy is the answer. Someone in my chat. I would have expected that in your chat.
Not sure about that. Depends how much planning you're talking about, right?
Yeah.
In one sense, we have a planned economy now because we have central banks and we have active government policy. We even have some price controls. So that degree of planning, sure. I mean, I think that's inevitable and good, or can be good. But an entirely planned economy, I'm not so sure about that.
So you're not a communist, Yui. I think some people in my comment section also wondered that. Not in this stream, but under the video.
Yeah, I mean, going back to some of the proposals that I've seen from MMTers about managing the economy, they do seem like quite extensive programs of price controls, and it relates to the war analogy you were speaking about earlier, right? Like, because that's during the war, the way that inflation, not to mention everything else, was managed was through rationing, right? And I guess MMT is some of the time might say that the pandemic and perhaps the climate crisis too was is kind of similar to a war. We should be on a war footing and we should be rationing in a similar way, but perhaps temporarily rather than as a permanent policy. I mean, there's an article by Nathan Tankus and Rohan Gray where they talk about this in the Financial Times Alphaville blog, and they talk about their kind of policies for managing inflation during a Green New Deal. This is all pre-pandemic, by the way. And they also released a full report. I don't know if you saw this, Yuri.
No, so this is
Nathan...
on FT Alphaville as well, by Nathan Tankus?
No, the full report is on Nathan Tankus' Substack, and it's like a 40 to 50 page report on basically how to manage inflation without interest rates, without interest rate management, or without solely interest rate management. And I haven't had a chance to delve into it completely yet, but it contains a lot of ideas, and I think a lot of them are, I wouldn't call it central planning, but they're quite heavy in terms of the amount of intervention that would take place.
Interesting. I can't just find it easily, but I think I'll share it under the stream once we're done talking. Hey, I had a question from the chat that might be interesting, and that is about China. And I also had a question from someone before that about exactly the same subject. Like, there's this sort of story that China was exporting deflation for the longest time, right? So the idea being there was this massive labor force that wasn't working, coming into sort of the global workforce, and that drove down wages everywhere when production moved to China. But now I think there are some signs that the situation is shifting there, in the sense that wages are rising in China. Might that actually sort of contribute to global inflation, going up again? What do you think of that?
Yeah, I've heard this argument before. It's a really, really interesting one, and it kind of takes the credit away from Western central banks, right, for taming inflation, because people talk about the Great Moderation and taming inflation for like, a couple of decades or even more with inflation targeting. But if it's just been the rise of China and a lot of consumer goods basically having extremely low labor costs and therefore low prices, then it seems like it actually might be global factors kind of outside our control, our immediate control at least. And I mean, it is worth asking, to what extent does inflation within, say, the USA depend on imports from China, right? Because I think, while the US and the West import a lot of things from China, there are also a lot of things that are produced either in other countries or at home. So I just wonder if we might risk overstating that a little bit.
Yeah.
I'm not sure what you think of that.
Yeah, so it also gets me thinking, like, if that's true, I think it is a plausible story that wages are now rising in China. China has, to a certain extent, caught up, and that might put some more inflationary pressure on. But I'm wondering, like, the way that global sort of commerce works, doesn't that then just give an opening to other countries? I mean, there's still billions of people living below, I'm not sure if they're living below the poverty line, but at least being very poor, with very low wages. So that could be that a new China will rise, and then boom, we again have this deflationary trend coming from the new China, so to say.
Yeah, possibly. I mean, I guess it depends on how big these countries are. Obviously, China was, a massive source of deflationary pressure because of its size, and I guess how willing and able these countries are to kind of, produce those same goods. I mean, I don't know. There could be an argument that global standards, surrounding wages, things like minimum wages, as well as working conditions have risen, which I do think would be a good thing, by the way, even if it causes inflationary pressure in rich countries. I have to say that. So yeah, I mean, the honest answer is I'm not really sure to what extent it's China and to what extent it will continue.
Yeah. Hey, do you have some questions in your chat, or should we move on to the explosive price controls debate?
So I'm just checking through the chat. Can somebody explain briefly what MMT is? So let's do that. It's always worth saying that again. So MMT, it stands for modern monetary theory. It is a kind of heterodox set of ideas which has gained a lot of prominence over the past decade or so. And MMTers basically advocate usually more expansive fiscal policy, governments doing more expansive monetary policy as well, governments kind of basically printing money to finance their own spending. And it says that government debt isn't something we need to worry about, and all we need to worry about is inflation if the economy runs too hot. So yeah, that's what MMT is in short. Do you think that was an okay definition, Yuri?
Yeah, it sounds good to me. But again, I think we both still need to dive into MMT a little bit more to be super confident about it.
I've got a lot of people talking about Japan. So what does the inflation of Japan not really affecting economic growth say about the worry of inflation in the West?
Yeah, so I did this big video on Japan, and I think Japan is also been featured in our video quite heavily, right? In the sense that Japan always presents this conundrum to all theories, in the sense that, you know, they did the massive monetary policy expansion, deflation. They did the massive fiscal expansion, although, okay, that one is you know, a bit more controversial if they actually did that. But government debt at least went up like crazy. No inflation. And one argument that Team Permanent brought forward is that now we're going to see this aging, and that's actually going to lead to inflation rather than deflation, because now you have a lot of people who are older and who are going to spend more and who are leaving the workforce, hence sort of driving up wages and reduced saving compared to spending. So that's actually a big argument for Team Permanent. But again, they get also into trouble. Like, that didn't happen in Japan. And then they say, well, but Japan moved production to Southeast Asia, and now we can't do that anymore. But yeah, I wonder if that's true.
So Japan's basically just problematic for almost anybody's theory of the world, I think.
Yeah, it is. Although,
Yeah.
I mean, you did see a lot of the same dynamics later, especially in Europe, but also in the States. Before this pandemic happened, and we again have inflation, of course.
Yeah, I mean, yeah, that I don't know too much about Japan, but that sounds pretty plausible based on the little I do know. I mean, there's the old economist joke, isn't there? Being an economist joke, I'm going to warn you, it's not very funny, but they say there's like three types of economies, right? Developing, developed, and Japan, because it's just like such an anomaly.
Yeah. Then there's just one more question that I have here, which is, you know, what about if money is going offshore, or moving to other countries? What does it do to an inflation rate in our country? But for that, I'm actually thinking myself, like, we have global inflation, so I'm not sure how much that actually explains. Although you could have capital flight where money is going offshore, and that actually leads to a lot of inflation, because then the currency tanks, and I think that's actually a large part of the story in many emerging market economies that we're seeing now, like Turkey and
Yeah, I think, and you get, I mean, one of the things about raising interest rates in somewhere like the USA is that you may encourage that kind of capital flight, right? From the poorer countries by making it more attractive to invest in the USA. And I know that things like the Volcker shock, for that reason, among others, had really negative effects on the poorer economies of the world. So the Volcker shock, just for reference, everybody, was the 1980s, when interest rates in the USA were set really, really high.
yeah, and that is, I think, also indeed a worry. Like, especially for countries like Turkey now, of course, big part of their inflation comes from their own policy. But if the USA hikes interest rates now, that I think you will see a massive capital retrenchment, or even more, and so that might actually paradoxically lead to a lot of inflation in some of the sort of financial periphery countries, you could say.
Yeah.
You know, there's actually, before we move on to the price controls, there's actually this, I'm making a video on the economy of Afghanistan, and I can't talk too enthusiastically about it, because there's absolutely a massive tragedy going on there right now, an absolute economic disaster. But what's very interesting is that they have this capital flight. They used to import much more than they exported, and now all of the aid money is gone. So I was like, oh, hyperinflation is in the cards for them. But what I found that during this Odd Lots podcast interview with the central banker there, is what I found out is that they don't have a money printer. They outsourced money printing, the actual printing, which is still important for them because they use a lot of cash, to a country that now, because of the sanctions, is not willing to extend that service anymore. And still they have double-digit inflation. And I think that's again like a powerful signal that inflation is different than just money printing.
Wow, that's absolutely fascinating. I didn't, oh God, I didn't know that. I mean, yeah, I think my understanding of hyperinflation is that, usually the money printing tends to follow the inflation, right? It,
Yeah.
it tends to come afterwards, and the problem is that there's a lot of things going on in the kind of real economy, if you want to call it that, and in the things like external debt, things like war, right? Things like political upheaval, all of which you clearly have in Afghanistan. So that is, is quite a powerful case study, I suppose, in that.
Yeah, very sad case study, but indeed,
Yeah.
yeah. But it does, I think, to give credit a little bit to the others, or to sort of people who I argue with the most. It does show, I think, that indeed printing money is a part of the hyperinflation story. It's just, when we look at cases like Hungary, Weimar Germany, and now Lebanon, it usually follows a massive run on the currency, and it doesn't precede that.
Yeah, I mean it feeds into it, right? You get like a vicious spiral. That's the issue. So I mean, whether this will help Afghanistan in some way, I guess remains to be seen. Will we find out in your video?
Yeah, yeah, exactly. Hey, Yui, price controls. There was also a massive, I think, a fairly vicious debate as well, especially on Twitter, among economists on price controls, personal attacks, the whole shebang bang.
Yeah.
What's your take on that?
Oh God, I mean, price controls are like the kind of sacred cow, I think, of like mainstream economics. Well, sorry, I should say the reverse. Opposition to price controls is the sacred cow of mainstream economics. Uh, I I really think that they can be good and they can be bad, and a lot of economists have a kind of reflexive reaction to it. I mean, did you see that midterm exam question at the University of Chicago?
Yeah, so just to fill everybody in, there was an actual exam question at the University of Chicago, sort of stating a professor, I think Bernie, even they called it like Bernie after Bernie Sanders,
Yeah,
at the University of Amherst, I'm not sure how you pronounce it,
yeah.
is not a real economist and is suggesting, oh no, is suggesting price controls. How would a real economist respond to it? Just asking students, right? That's
Yeah.
what it said, right?
Yeah, essentially, yeah. So this guy, implied not to be a real economist, is suggesting price controls. How would a real economist respond to this?
Yeah, yeah, and
Which,
that's in
I mean, it's just ridiculous.
and it's in reaction to an op-ed by a assistant professor, I think, from University of Amherst, Isabella Weber, who I think wrote a very interesting case study on China, actually. And so I think knows much more about price controls than typical economists, because in China, I think they did use price controls quite extensively during their development. And she actually didn't go into too much detail. It was in the Guardian, so a bit of a left-leaning newspaper, saying, hey, actually, these corporations are making massive profits now with all of these supply shortages. Maybe we should do price controls and let them basically take the hit, right?
Yeah.
And that's heresy. You can't say
Yeah.
that.
Yeah. I mean, I think actually I have to be honest. I actually think I didn't read that original Guardian article. I've read the fallout from it, but on Twitter when everyone's annoyed at something and you have a hard time figuring out what the original thing was that set it all off.
Yeah.
I think I never got around to reading the original one, but I've read a lot of the debates since then, and like there are perhaps some arguments for price controls that are targeted and carefully designed in specific sectors. I think especially if there's monopoly power. And by the way, somebody on my chat sent asked something about monopoly power and prices. So I guess that relates to this discussion we're having. But I think if there's a great degree of monopoly power and you have quite high markups, then I can see price controls as a policy. And indeed, it's worth saying that is an implication of like fairly basic economics, right?
Yeah.
So if you're going to act like basic economics says you can't have price controls, I actually think you're pretty much wrong, because any theory of monopoly actually says that they're a good policy. So yeah, I think they can be a good policy. I do want to say I think they can be a bad policy. I know in the UK we've had price caps on energy, and actually what's happened is that some of the companies, the gas and electric companies, have started to go bust. My own company, Bulb, has gone into administration. And I think you've got to be clear, is it that prices are rising, right? But because costs are rising. So if prices are rising because costs are rising, then a price control isn't what you want, because you're just going to end up making the companies go bust.
Yeah.
But if prices are rising, but they're rising much more than costs, or costs aren't rising at all, then you want to look at something like a price control. So I actually think that gas and electric cap was an example of a bad policy. I think the problems with the UK's energy prices stem from like the actual infrastructure rather than the retail side. The retail companies don't make as much profit as you might think. And, that's all acknowledging that energy prices are really high and it's hurting people. But I just think it's the wrong policy to pursue. So that's a case where I think price controls are bad. But there are plenty of other cases where I think they can be effective.
Yeah, but for inflation, I'm wondering, like, if we look where is a lot of the pressure coming from? Second-hand car market, mainly through, as I understood it, chips, right? Computer chips. The computer chip companies are not in Western countries. I wonder sort of how much it's even realistic to do that. Like you can put price control on car dealers, but they're not monopolies, so there it wouldn't make sense. All right, and I don't know. Like I read her original article, but it was very brief. It was there wasn't too much substance in it. Then in sort of a lot of the articles that came afterwards, there definitely was more substance to it. But I didn't see anyone make a really good case like, what's a monopolist? Google, right? Oh, it's coming from search engine costs. No. I didn't see anyone sort of give a good example of where inflation is then coming from, where price controls can actually do something.
I'll tell you what the best argument I saw was about this. And it actually, again, it relates to this issue of like short-term versus long-term policy we've been talking about. The best argument I saw about this was an article which talked about the how monopoly is to blame for current inflation. And what it said was actually it's not just about monopolies are raising prices. What's actually happened is that arguably monopolies have been responsible for some of the more stretched supply chains we've seen over the past few years, over the past decade or more, and that is kind of a much more indirect way that we've seen that their effects inflation. Sorry, I'm just trying to look for this article. That's why I'm stumbling a little bit. Yeah, in the Washington Monthly. Sorry.
Okay.
By Paul Glastris. Pretending monopoly has nothing to do with inflation. Right, yeah. So it mostly talks about this issue of supply chains, just-in-time supply chains, how stretched they are, and how that's a policy that's been pursued by monopolies who have control over the entire supply chain. There's not enough competition, there's not enough redundancy and contingency, and that has fed into the supply chain bottlenecks, which has itself fed into inflation.
But isn't like there's not enough redundancy? Isn't that a consequence of competition? Like, wouldn't you expect there to be redundancy if there were monopolies?
So I think it's basically an issue of cutting costs, right? So, any parts of the supply chain which are deemed to be redundant by a monopoly might be cut, right? So they can like maximize their efficiency and get the most out of what they've got. So I mean, at least this is the argument of the article. and it's outsourced things, and it's taken things like, I think it says yeah the manufacturing capacity for computer chips, for example, has been offshored, and therefore, again, more vulnerable to global trends. And we don't have the capacity at home, or people in the US don't, as well as abroad. So I think that was the thing. It was this kind of cutting costs and maximizing efficiency by monopolies. I mean, whether competition would solve that automatically, or whether it would require a more active policy, I'm not sure.
Right.
But I
Yeah. Yeah.
think that was the argument.
Yeah, okay. So you could then shield, like, it's basically arguing for more national industries, which do compete with each other, but perhaps like behind, some small trade barriers, so that they will have some buffers. Like they don't like, because like if there's full competition, companies won't have big buffers against events that don't typically happen, right?
No, I mean, yeah, it's an interesting point you raise. I mean, it's there's almost an argument that some kind of like regulated oligopoly is the optimum there, right? Because then you don't have the kind of outright competition where there's no margins, and no room for redundancies, as you said, but you don't have the monopoly either, where redundancies are cut because the monopoly doesn't want them and has the power to.
Yeah. Hey, maybe we can, tied into this. I think I saw today and yesterday, even the Bank of England governor arguing for price controls, but not on companies, but rather on labor, in the sense that he was arguing, hey, maybe people should not demand this pay rise if we don't want to get into this wage price hiking spiral. Did you see that as well?
Yeah, I did see that. What do you think of it?
No, so I saw this response from Martin Sandbu, who is one of my favorite columnists in the Financial Times, and I thought he was, right on the mark, in the sense that he said, like, this is so clearly a hypocrisy in the thinking of the Bank of England, which they not always, but I think this sort of group of the people in charge now are fairly sort of orthodox, and so like against price controls typically, but wage controls, they don't acknowledge that this is also price controls.
Yeah, absolutely. No, I completely agree with that. I think, and to be honest, like that, it's not just that comment, is it? Right? It's like for the past couple of decades, or 3 decades, it's been all about managing inflation, seemingly by managing labor, right? And moderating wage demands through interest rate rises. And I think that is, I mean, we talk about planning, right? That is planning of a kind, and it's planning for labor.
Yeah.
So, yeah, it does seem to be hypocritical. And, it's worth saying that having wage growth outstrip, inflation for a little bit, and having essentially labor's share of income rising after a period in which it has actually been falling for a while, wouldn't necessarily be the worst thing in the world. But I think it comes back to, what mechanisms do you have for managing these things? And I think things like, sectoral bargaining, which, did we discuss that in the video? I think that might have been mentioned in the video.
Sectoral bargaining. Yeah, what we discussed is that we didn't expect this massive pressure in labor markets right away, because labor unions don't really have the power, the sort of power anymore that they used to, and that was the case in the 70s.
Yeah, exactly. So, having sorry, I got distracted by chat. I've lost my place. So. Wait, what were we talking about? Sorry.
So the fall of labor unions and the impact
Yes,
on
of course
wage
we were.
price
Yeah.
inflation.
So the fall of labor unions. Yeah. So I think, if you take somewhere like Germany, my understanding of the German economy is just that they, they have unions which are kind of at the table in terms of wage negotiations across entire sectors, right? And
Yeah.
the unions themselves kind of they ensure wage rises, and I think Germany's performance in terms of median real wages has been very much better than, for example, the USA or UK. I think they've been less stagnant there. So they're ensuring there are real wage rises, but they are, not doing it so much that they're allowing a wage price spiral to set in. And that's the kind of thing that I would like to see, right?
But
More generally.
I'm afraid it's the other way around, Yui, in the sense that Germany and the Netherlands as well have this very strong system of partly labor unions, but also they negotiate sort of very centrally in a very central way with the government. And what the Netherlands and Germany famously did, like 20 years ago, is moderate wages, and that's why they're now so competitive within Europe, because they have artificially repressed their wages in an ironic twist of fate through the labor unions.
So what do real wages in Germany look like then? Have they stagnated over the past sort of 30 years or so?
Yeah, I think so, and especially compared to other European countries. So, Germany used to be the sick man of Europe not that long ago, like in the early 2000s, late 90s. And, I know this a little bit because in the Netherlands they did the same thing. They did this active policy of wage moderation, like you won't demand wage increases that much, and that will increase our competitive position. And you have seen since then. Like I'm not sure if the econometrics have found a super significant causal relationship, but I think likely. But definitely, you've seen that Germany and the Netherlands, since having implemented that, have gotten this huge trade surpluses, especially also compared to other European countries.
Yeah. Yeah, fair enough. So I stand corrected. But I think I would like to see, Labour to have a seat at the table in terms of more centralised mechanisms that allow kind of, moderate wage increases, but without allowing wage price spirals to set in. I mean, I think this is the thing, right? When you get comments from the Bank of England chief like that, it's kind of there's an element of condescension, and stop asking for wage rises when actually Labour, doesn't have a seat at the table, right, necessarily, and doesn't have as much power over these things, which I think it annoys people, right? So if you allowed Labour to have more of a say, then perhaps they would kind of agree to moderate their wage demands. I mean, it's just it makes it more democratic, right?
Yeah. Yeah, and it is true that also in the Netherlands, I can't speak for Germany on this front, but labor power has definitely declined. It's just that they do still do the negotiations. And I think that there has been this very interesting dynamic all over the world, basically, that sort of left-wing parties have, and labor unions as well, have themselves in the late 90s, become rather neoliberal, and so have willingly sort of given away their own share of GDP, basically, right? So that might help explain why you do have these stronger labor unions, but they actually ended up negotiating wages down rather than up.
Yeah, yeah. I'm not sure how to solve that, I have to say.
Yeah, but it could one other explanation that I can think of is that it has to do with the structure of the European Union itself, because in the end, it has helped laborers in Germany and the Netherlands to get ahead of their Southern European counterparts, because we have certainly done better than Southern Europe in the Euro crisis. So maybe it was rational after all of them to do that, but I guess we should get into that deeper in another discussion while playing
the
perhaps Age
Eurozone
of
crisis.
Empires.
Yeah, it might be too much.
But so I think we've now, in my idea, I think we have discussed the two major strands of the public discussion that we didn't discuss in the video, right? Price controls and MMT, and whether or not it was right or not. And we have sort of shifted our positions a little bit, but I at least had in the thumbnail this very provocative or somewhat provocative statement: "Were we wrong? Were we wrong on inflation?" What do you think?
A little bit. Underestimated the degree to which inflation would remain and some of the problems. Also, failed to predict Omicron as well. I think was a big part of that, right?
Yeah.
So yeah, I think I was certainly wrong about that. Maybe too sanguine, but the focus of the conversation about inflation. I mean, I don't know how many times you hear the term supply chain now compared to how many times you heard it before. I think that we were right on that. We were right to focus on that, and that continues to be the subject of discussion. And I'm really interested just to know, to see what more we learn about supply chains, because we've learned so much in the past few months, the past 6 months or year. We've learned so much about them that we didn't know before. And what kind of policies that people, whether they're MMTs or otherwise, come up with to try and manage supply chains better, because I do think that's a really, really crucial thing going forward, through the pandemic and with the climate crisis as well.
And I think this also ties into a trend that was already there in economics, where economists start to pay more and more attention to the details of the economy, because basically, like, all the macro models, the simplistic macro models failed, right? Like the central bank new Keynesian model, really relying heavily on the labor Phillips curve transition mechanism of inflation, that failed. The money printing model failed after the 80s, I think, right? Like all the sort of big simple models failed, and there was already this trend in economics to dive a little bit deeper into what, the economy is a massive complex system, and I think this plays into that, right? We've again seen, okay, not many economists predicted this. And so we need to understand better where it's coming from. And I think that was also partly the idea of doing the video with you, where we have really sort of highlighted different channels, and then we can all, and I see lots of people in the chat actually doing that, fervently disagree about which channel is stronger, but we can at least agree that these channels are all a possibility.
Yeah, absolutely. Any economics that is more focused on institutional detail and what's happening in the real world, I can be convinced of either side on inflation if you give me like a good argument that is based in reality, right? As opposed to some of these models which maybe aren't always so useful.
Yeah. And before concluding, what I wanted to ask you is, like, what I've also seen is like lots of people saying, hey, but what will inflation do next? And will they raise interest rates? And there, what I wanted to ask you, or at least talk about with you, is I think what people don't always understand about economics, and that's partially our own fault, or at least the economists that you have sort of always argued against, and that is that we pretend that economics is like physics. Whereas in this sense, when it comes to prediction, I think it's more like being a political commentator, in the sense that, you can say, oh, there will be a war with Russia and Ukraine, but everybody knows that a political commentator may be super good, but still can be wrong, because there's just so many factors. Like, one, that we don't know, and two, there's complexity, there's this interaction between governments and private sector, and which is extremely difficult to predict.
Yeah, I think it's the paradox, because people always want predictions, but then obviously a lot of the time they're wrong, and then people, get annoyed with experts and pundits for being wrong about them. But I think, the important thing is maybe we should do less predicting. I don't know, maybe we should do less predicting, but the important thing is, whether the analysis that you use to make the prediction is, clear and sensible and reasonable, rather than the prediction itself, in my opinion.
Yeah, right. And then, like, if I can use that analogy again, you can say, okay, as an expert or as someone who has studied, maybe I shouldn't say expert, but as someone who has studied this for some time, I think the chance of war between Ukraine and Russia, like this is hyperbole, I haven't studied this, is 70%, and then obviously it could still happen because 70%, right? And I think maybe we can phrase our inflation forecast in this way as well, right? So the chance that this is transitory, I would say, in the sense that will end fairly shortly after the pandemic, I would still say is 75%. Would you be willing to do a prediction like that as well? I mean,
After just saying we shouldn't do predictions, no. But this is a
right?
more hedged prediction. Yeah, that sounds about right to me. I think, yeah, if the pandemic is over, I guess it prompts the question of what it means for the pandemic to be over. But I mean, you could say, for example, by the end of the year, will inflation kind of be half of what it is now? I'd say, yeah, there's like a 70%, 75% chance of that.
And then just one more to really end. Should central banks and governments, like both separately, stop stimulus, like crisis level stimulus?
No, I don't think so. I don't think they should, but I do think that they should basically. One of the things in defense of MMT is they said, well, the stimulus that was delivered was a crisis stimulus, right? It was just, let's just throw money at everything to stop the bottom from falling out of the world, right? Which is fair enough, but it wasn't designed with inflation in mind. So I do think I am a big fan of active fiscal stimulus and monetary stimulus, but I do think they should, in the future, on an ongoing basis, be designed with inflation in mind.
Okay, yeah. So I would argue there, I would prefer monetary tightening. So an interest rate hike and or stopping quantitative easing. But not necessarily because I think it will do that much to inflation, because there's such a huge supply chain and what I call demand shift component to that. But because financial markets have risen so much that I wonder, if that's not, too risky or like a sugar sort of high policy. But then to mitigate that, let's continue doing a little bit of the fiscal crisis support especially for the people who have been hit by COVID without, and they couldn't do anything about that, right? So maybe extend some of the support to the event or industry or, that's where I'm leaning to.
Yeah, I think if monetary stimulus has inflated asset prices, then and house prices and things like that, then it might be prudent to contract QE, especially interest rates like the base rate. I'm a little bit more concerned about because of things like mortgage costs for poor families, but certainly I would agree on QE.
All right, excellent. Shall we leave it at that, just to, in the interest of time?
Yeah. Can I say one more thing to my chat?
Of course, yeah.
And well, I guess everybody, this is going to be uploaded. I have a channel where it's not going to be listed, it's not going to be public, but it is going to be uploaded to my playlist where I have my streams. So don't worry about that. If you missed it, you haven't been able to watch it, whatever, it's going to be there.
Excellent. And I'm going to actually try to pick out some clips of what we discussed and upload those on a second channel for people who don't want to sit through a 1 hour conversation.
Yeah, half of which was technical difficulties.
Well, yeah.
Not quite half.
Yeah, but we should definitely talk again, Yui, and maybe even while I'm completely eviscerating your economy in Age of Empires 4.
Those are fighting words, right? I can't wait for that.
All right, take care. And from my chat, I'm just gonna stick around a little bit to answer some questions. So see you. Thank you so much for this, Yui. I really learn a lot from you, and I'm very happy that you contributed to this inflation video.
Likewise. Thanks very much for having me on.
Right. Take care.
Yeah.
Whew. All right, man. Chat. What have I missed? I think you're all just debating like crazy. I don't even see that many questions. What do you think of this analysis on our sites? Do you think that's fair? So Pundog Cat is asking, what are the dangers and reality of asset price inflation? So the dangers are, mainly a bust of asset prices, and then you can get this sort of vicious cycle of people who have borrowed against rising asset prices. Asset prices then go down and they cannot repay their borrowings, and so they have to default, and so they have to spend all of their income to repay that debt and cannot spend that in the economy. So that hurts just working people, shop owners, business owners, everybody. I did a video on this, why I've renamed it a couple of times, why private commercial bank money creation is dangerous, I think. Yeah. What do you think about just taking the pain? Is it better? Yeah, I think ideally you would want to, like, the Keynesian idea is stimulate in in a recession, and then do contractionary policy, and I think that was also the MMT idea that we discussed in a boom. And now the economy is booming, somewhat. I can understand why policymakers are afraid. I think this is the first recession where, in a long time, where they have been rather Keynesian. And to their credit, we haven't seen a massive recession, which I expected at first. But we're now also seeing inflation. So maybe the demand pool channel is stronger. At least it is in line with what we're seeing now. And then should we take the pain? Yeah, I mean, ideally you would then do contractionary policy at some point. But ideally you wouldn't have to do it like super heavily, right? So ideally you just cool it down and it would stabilize, but that's very difficult. Okay, higher interest rate is never the cure. I'm not sure. Yeah. It's difficult. From Noah, what are your views on the fiscal room to respond to recession induced by rate hikes? Yeah, so there is some difficulty there. I think if you hike interest rates, then you make fiscal policy more difficult, right? Because you also have higher interest rates on government debt. But then I think it really matters sort of how big your economy is. Like if you're a very small open economy, then you're more, then you have less room to spend more money, because you're also very much dependent on foreigners and how confident they are in your currency, and hence not selling your currency. But if you're a big currency area, then I think that should work. Like for example, just to speak for the Netherlands, which has I think still very negative real rates on their government debt, in the sense that inflation is much higher than they have to pay on government debt. If let's say that the central bank hikes rates 1%, they still have negative real rates. So I think then the Dutch government still has a lot of room to do stimulus if necessary. George is happy I found this channel. Thank you. I'm also very happy that you found this channel. Do you think that fiscal stimulus and monetary policy was more targeted to individuals and industries which would have been hardest hit by the pandemic? Would we have had as high inflation? Yeah, then it really depends where you think where you think inflation comes from. I think the fiscal policies in what I heard about it in the US were less targeted. Like everybody got these stimulus checks, right? That didn't happen in Europe. We didn't have that. Only businesses that got into trouble due to Corona could get stimulus, at least in the Netherlands. And what you did have is a lot more automatic stabilizers, what they call automatic stabilizers, meaning, for example, unemployment benefits. So people who were fired would then just receive more unemployment benefits. Or you had the schemes where employers who were about to fire someone were sort of given an incentive financially not to do so. So they were really targeted. And now you do actually also in Europe see more inflation, fairly close to the US, more than we might have expected if it was just blanket stimulus. Europe did far less stimulus than the US, and it still has rather high inflation. But what could explain that is that Europe is much more exposed to energy prices at the moment, specifically gas from Russia, and the global gas market. The US has more of its own gas market, and a large part of the energy price story was China shifting from coal to gas, and that made gas prices go up a lot, and that hit Europe, and it didn't really hit America if you look into the data there. So that might explain part of it. Martin is going to walk his dog. Say hello to to the dog for me. Let's see if there are some more questions. Tim says, do you think 5% inflation is benign? No, well, I mean, depends on what benign is. Huh? I mentioned in my talk with Unlearning Economics that I don't think I'm not in favor of high inflation, and I think 5 and 4% is also pretty high. People do notice that in their spending, and I just think if you have a unit of account, it should be stable, just because that makes it easier for everybody to do their calculations. But I don't think there's too much good research on this, so maybe I should look into that more. We have an MMT fan saying I should read Hudson. Maybe I will invite Hudson for a chat on a live stream at some point, or Stephanie Kelton, because I should know more about MMT if I'm going to talk about it. And the same actually goes for those of you who are more on the Austrian side. I would like to invite a couple there. I think someone in one of the comments on other videos already did some suggestions. I will look into that as well. I think that would be interesting to explore, ideas from multiple sides more. Yeah. Okay. Awesome. I think these there are not really that many questions coming in hot anymore, so I think we'll leave it at that. I'll grab dinner. Thank you all so much for joining. Consider subscribing to the second channel where we'll upload clips. I'm working on several videos at the moment, one about Afghanistan, one about Turkey is coming up. I'm also working on a quantitative easing video. I hope to become more consistent this year with uploading than last year. But it's a struggle since I'm still a little bit in the process of moving and teaching. All right, take care everybody.